Good evening, all. Ira Epstein with your SPDR ETF market wrap-up. And this wrap-up is for Thursday. We are at the 17th of February, 2022 in the evening. I'm watching the stock markets tonight already, and you're up sharply on a normal night in the stock market, up over 150 points or so in the Dow, getting the others rallying. I don't know what's going on. I've been on the news. Could it be a breakthrough of good things? Could it just be short covering? You don't know. And that's the problem you're having right now. You have this event, you have three events taking place that are moving the market. Forget earnings and all that. You got to remember what's moving the market every day that traders are looking at. They're looking at the Ukrainian situation. They're looking to see what the Fed's going to do a month from now. And then they're looking at the new Iranian situation. Is the U.S. going to make a deal there? Those are the three first thing events. Right under that, of course, are the corporate earnings. How are they doing? But if the market's in a war environment, you could have the greatest earnings in the world. You'll be the one standout stock you're hoping that goes up because everything around you is coming down. Conversely, you have a meeting of the minds and the Russian troops pull back magically, whatever happens, the market goes up. It's too difficult. So it's more right now, and what I've been telling people, because they call me throughout the day, what is it? I go, it's really simple. It's a day trader's delight. This is the kind of market where anything you carry overnight, you have a big exposure in because of the outside events that are much worse than normal. The last time we had 150,000 or so troops ready to invade a country was World War II for all purposes. This is a unique event. Don't downplay it in your mind, and don't downplay that it does impact everything around it. The outcome, nobody but Mr. Putin knows the outcome. He is the puppeteer. It is not the U.S., it is not NATO. We're not the game player. He wants us to dance to the tune. You're not going to have NATO, Ukraine ever join NATO. And by the way, we might as well talk about all the other breakaway countries. I want none of them in there. I want no NATO armaments being shipped in. All of them have to go, and I'll have a say on everything around that. Unfortunately, that sounds like a dictator of all of Europe. Isn't going to work. So if he's looking for that to be the outcome, I'd be shocked. I mean, anything can happen. But on a 1 to 10 shock, a 20 that he gets what I just said. That isn't going to be the case. Now, could the Ukrainians themselves say they're never going to apply for it? That they can do. Can all those breakaway countries? That they can do. But you'll never have NATO saying those countries can't join if they elect to join. You'll never have NATO say if they become NATO members, they won't deploy missiles in those areas. That's your demarcation line, and this is the big game. If you watch TV, I see today all these troops of trucks pulling somewhere in Russia. I don't know if they're leaving or coming, but they claim that they're leaving the front lines, probably Crimea, where war games are over. I don't know where they're going. I'd like to know why NATO keeps saying, and private services with satellites keep saying, the deployment is larger than it was now in Russia. How could that be if all these troops are leaving? And by newest estimates, by some services, it's gone from 100,000 to 150,000 or more. What are you going to do with all those guys? They're not there just to picnic. They're there for one thing. Are the skirmishes beginning? You heard that they did today. Each side pointing at each other, but the shells are flying. People are getting hurt. It's beginning. And you're not going to be able to control this on that border with all these people ready to fight. It's an accident waiting to happen. Maybe that's the game plan. When you look at Invesco, the bullish dollar setup, until you take out right now 25.48, the trend is higher lows, higher highs, bullish. There's divergence, and I'd expect that in this market. Momentum's pointing down. The trend is up. It's got a hold here. So I think you're seeing smart money trying to be a buyer, crossing their fingers, having a stop at 25.48. If that's taken out, I think in no time at all you'd be down to the 100-day average in the lower band. Why would the dollar break unless something has happened where you don't need the dollar for the safety? Safety being the hedge of the yen, the dollar, the Swiss franc, the gold market. I want me to go on, there's others. I don't know that the crude's going to be that safety if the Iranian oil deal is made. When you just go and you look at this chart sideways, it's a little different. You still have the uptrend, the swing line is pointing up. You're under on the daily chart, the 18-day average. So this chart is very different than when we take a look at the weekly chart with all the studies that I had on it. The weekly is more bullish than this chart, but in this chart, if you take out the lows of yesterday, not today, Thursday, of 25.61, you start the downtrend in the market. That would give you lower highs, lower lows. From here, that's 4 cents away. It's not very much. If that occurs, the next stopping spot, the 100-day average of closes, 25.57, and if that gives ground, 25.42. Admittedly, this is not a big moving chart. From the lower band to the upper is all of 60 cents. But instead of the dollar index, it's telling you, it's mirroring it, what's going on. In terms of momentum in the market, in terms of the slow stochastics, they're flat. So in summary, the trend is up, the bias is down, and you've gone flat right here. I figure it doesn't know what it's doing. That's the case. Apple turned bearish today. Lower highs, lower lows, momentum down, bias down. So until the market can get back up and over 173.34, the bears have taken control. They're probably going to try to defend the 170.34 level, and if the market could break hard, it visits this area just before the earnings came out that set the market up. Do I have faith in the downside? I don't. I wish I did. I just don't. I like Apple, but that tells me not to own it. XLF, this is the financial service sector. Well, this makes a little more sense to me as the market keeps falling back down. Nobody quite understands this curve yield, what's going on. I just see the whole thing having done this, and it can continue. I get nervous about an inversion in it. Why not? That can happen. Mortgage rates are going up to 4% now, so keep your eye on that, and yet housing is on fire. There are $1 million homes everywhere. I wake up and I listen to, in Chicago, it's called WBBM radio. It's a great radio station for news, traffic, but it's good. It's really good, and it's got a broad reach. It's all about real estate ads. I mean, you know, I always listen to see what it is. Ferraris and real estate ads. Very interesting station. Lower highs, lower lows, coming down to 38.41 to 38.06. Disney. As I said, I thought the market was in a stiff resistance area. That 100-day average in that number, I think the really smart money said goodbye. Now, I even hear Disney is going to do theme-based condominiums, possibly by its parks. Brand new way. This company is so inventive. It is such a franchise that, you know, I'm totally in love with the company, but even as a bull, there's a spot where you want to take money off a table. In XLI, so we got the industrial sector here. So this chart is not bullish. This chart, if anything, looks like a short sale, stops over 101.36, potential to the lower band, 98.37. When I come to the semiconductors, interesting day. Now you're at a point where the market's got to decide, pony up or get out of town. Because this is the buy zone, but momentum is turned down on you. The bias is up, the trend is up, and momentum is turned down. It's a rough one right there. In the home builders, you saw today that the permits were up, but that was it. Everything else, the starts and all, were terrible. So did they just put off because of COVID? I don't know. It was a very mixed picture in it. I will say this, if you get over 72.45 on a close, I think you'll reverse this whole thing and be in an uptrend before you know what's going on. Barring that, the lower Bollinger Band could be hit here. You are oversold. I don't think you're going to attract a lot of new short interest for the moment. In the energy sector, Iran is now in the picture. So the Biden administration and its wonderful way of doing business, we're going to make a deal with Iran and we're going to tell U.S. oil producers you can't produce. There is something that is not right here with us. How could our energy plan be to give money to OPEC, who just said no to the U.S. again when the president asked them to produce more oil, and to Iran, a sworn enemy of us, for God knows how long, and they're not going to change their color. But we want to give them all this and let them now go back to do business with South Korea, who's already called on them, according to the news, on Japan, who's called on them, another source of oil for them, and the grades work very well with their refineries. And this is what we're going to get because we don't know how to tell our oil producers, we're going to give you what you need to go out and produce that oil, and you can count on us. We change our policy so much, we shoot ourselves in the foot. Yes, we're going green. At what cost? You're watching Europe, they're all burning coal again. Come on. GLD, higher lows, higher highs, overbought. The metals, gold specifically, is very vulnerable to each time you hear that something good is happening with Iran, with the Ukraine. That'll be the big position that you watch. Would I tell a client ever to buy over a Bollinger Band? I swear to you, the only way it would happen is an accident. I would never do it. XME, embedded. Now I've got what I want. On the pullbacks, I think the pros are going to buy until the red line closes under 79. I think they begin that right now. Copper, not embedded. It's overbought. Can't quite do anything with it. I like these base metals. You know that I've talked about that for a long time. Then today, I think that the pros sold. TLT, BND, AGG, all those markets. And I think tomorrow they get out of them if you lose the embedded reading. And tonight, you see where they're at. FXE, trying to pull back to the 18-day average to see where you go. Now, you know that I love this FXE business, well, let's talk FX trading, that I love. I love spiders. I love ETF trading. I like some of these different markets. They're in my brain. And I cover them all. Each day, I cover 41 charts on a Monday through Friday basis, barring a holiday. Each Saturday, I cover them on a weekly basis using weekly charts for the bigger traders. I create bonus videos from time to time on different markets so that you see the impact on them. I'm going to give you ideas with my 52-year experience in this, how I view the charts. I'm going to teach you what's going on. I'm going to teach you technical analysis and tell you about the fundamentals, what is doing it. And I do it first thing in the morning, so as your trading day gets going, look what he's saying. All right, let me take a look at what I want to do today. That's the idea. Go take a look and see why and how. Just go to our website. Under the word research, it's all explained there. You have a good day. I'm Ira Epstein.